Right, well, thanks everybody for having me. Thanks very much. I mean, Malusi, for having me as well. It's really nice to be here speaking with the South African Institute of Valuers again and to speaking to this audience. It's always a pleasure. So I'm going to take you through a couple of slides that talk to where the property market has been over the last few years, sort of where we ended in 2020, and where we sort of think we're probably going to, looking at some of the indicators now in the middle of 2021. And some of the key trends that we're looking at, some of the sort of highlights through this year. So before I start doing that, let me just introduce who MSCI is for those of you who don't know. We're a much larger business, and just looking at real estate, we say that we try and shed light on investment decisions across the market. So not only looking at real estate, but looking at equity and all other asset classes as well. Probably our biggest growing business at the moment has been ESG. And this is because investors are very much trying to understand the risks that are associated with their investments that are non-financial in nature. So looking at environmental, social, and governance. And another one we can add to that recently is climate. So, you know, we're listening to all the regulations that are coming in, and with the net zero commitments that many companies are making globally at the moment, we need to understand the risk of not complying or not moving towards net zero quickly enough, and what that might have on an investment case. So MSCI are doing a lot of work in that space at the moment. Today I'm going to talk to you on the real estate specifically, and we'll look at some of the global trends, but more focused on South Africa. So just to set a little bit of a scene, when we talk about South African real estate, or when we talk about total returns in South Africa, we are looking specifically at the total return of directly owned assets. So it's not an indirect listed fund return, it's the return you get of holding the assets directly. So it's effectively, the total return is effectively a combination of the income that you're receiving from the asset and the growth on the value of that asset over time.
What I'm going to do is just start with a basic, almost 101 of how I see real estate, and then from there dive into the various asset classes and what we're actually seeing on the ground, what we're hearing from our clients, and some of it just my own personal views on how I see things shaping up. So it's yeah, and feel free to ask and people to put their own views forward, because no one has got a monopoly. The rear view mirror is always perfect, but going forward, we can only infer from what we see. Andre, if you can go to the next slide. So just as a form of background for each one of the asset categories, I'm going to go and talk about the space market. Space market is just basically the usage or right to usage, and it tends to be the most active part of the real estate market. It's where the supply and demand for space really comes to being, and that supply and demand obviously drives what rentals are, because you've got the users wanting space and you've got the providers of the space wanting the tenants. And then from there, we'll jump into the asset market, which is more the ownership. And this is the one where we see less and less trade and activity happening. You know, because real estate is a capital intensive category, and you really need lots of cash to be able to buy. And then the third one is the one that's considered the most brave, which is the development market. And I think, as Aileen has said, you know, this is usually going to be driven by economic growth. You know, you can't build unless you believe there's going to be demand, and demand, unless something has happened like a structural change, you're not going to get demand for that space.
Thank you all very much for joining us this afternoon. I'm going to address you on the civil unrest that we experienced in July, and really just volunteer a couple of comments around the role of property valuers in the relief and the rebuild process. And we'll just pick up the conversation after that. So just a very brief review of what the presentation will address. I live in Pietermaritzburg, so for me this was exceptionally real. We can't underestimate the fear, the terror, the 24-hour roadblocks, the rate of change, and the complete unpreparedness of us to meet this kind of disaster. So I really do think that we have demonstrated resilience. There have been some upsides, but it is going to be a cost that we will count for some time to come. So as Eileen mentioned, yes, the numbers do tell a story. And one of the things that I think that we as valuers can do is to contribute towards how we assemble the numbers towards telling the story. This is the story that SAPOA published at the beginning of August, and you will see that it's very much focused on the formal sector. What it doesn't indicate is, aside from the mentioning how many informal traders were affected, is the distribution of the looting and the unrest and the effect that that has had on the rural areas.